SPACs, better known as blank check companies, have been all the rage. In fact, there's been an abundanza, them going public nearly every week. But not everybody is a fan of the SPAC. In fact, the number of people and individuals shorting these stocks continues to surge as well. And the money on the short side is now $2.7 billion. Not a lot, but certainly well above where it was just a couple of months ago. Matt Wirtz co-wrote an article in the Wall Street Journal detailing the rise of these short bets, and he is here now with more. Matt, good to have you. Who specifically would dare bet against Chamath and the SPACs?
Hey, Brian, thanks for having me. So, you've got two players on the short side right now. One is who you would expect, which are the professional short sellers, the Muddy Waters of the world. These are firms that go out, publish research on companies that they think are overvalued or that may be misrepresenting themselves to investors. And they tout that position and they put money where their mouth is and they try to make money off of that. That is a big part of what you're seeing right now. You've got the likes of Hindenburg, Muddy Waters, until recently Citron, publishing reports and saying either there's something wrong with the story here or, look, it's just gone way too far, way too fast. The other investor that's taking a short position in SPACs is the investor who's made a lot of money on SPACs and who's maybe concerned about the same thing, that things have run up a little too fast, a little too far. They want to take some money off the table, but they don't want to sell their stocks necessarily at this point. And so what they're doing is they're hedging a little bit. And that's why you saw that big increase that you just had on the screen over the last couple months.
Yeah, and it's SoFi, which one of Chamath Palihapitiya's funds is going public with. That's what you wrote, 19% shorted. Lordstown Motors, of course, that report from Hindenburg came out last week as well. So is it a certain type of SPAC, Matt, that is being gone after? There's a lot of stuff around electrification of vehicles, battery companies, anything that's got kind of the buzzword on it does, at least from your article and other data I've seen, seem to be maybe particularly loved by the shorts.
I would say yes, but not for the reasons that you think. So it's not that they necessarily don't like EV, although in some cases they like. Nikola is a great example where there was a particular view on that company. But what the short sellers are primarily looking for is liquidity. They need a market cap. They need a stock that they can borrow at a price that isn't prohibitive. So there are a lot of small SPACs out there that I spoke to short sellers that they don't like as a business model, or they don't like the sponsor, for example, who might not have experience, but they can't short it because it's too expensive to borrow the stock. So what you see them going after is some of the bigger names that might have gotten a boost because Chamath is the sponsor, right, or any other big name out there. And you also see a lot of demand on the short side for companies that have already been purchased by a SPAC.
Shepard Smith here. Thanks for watching CNBC on YouTube.